Hello, traders, and welcome to the market opening preview on a Wednesday, Hump Day, July 20th, 2016, as we approach the middle of an exciting trading week. Traders, this is brought to you through FXCL Excellence in Trading. Traders, please come visit our website at fxclearing.com for your trading solutions. Hello, traders, coming to you live from Pattaya, Thailand. Cloudy, rainy skies, day number 2 of rain, and well, we don't know. Yesterday, I actually was able to get to the pool. In the afternoon, it actually got sunny. I was able to get in there an hour before I had to get ready for the London Open, and I usually get in front of my computers about an hour to an hour and a half before London starts, and that is London starts in Thailand at 2 p.m. In Thailand. So I was in the pool about 11:30, and everything worked out really well. So then we had a busy, exciting day yesterday, and we'll talk about that as we get to news and commentary. And of course, we have 6 currency pairs to look at today. So we got a pretty busy presentation for you today. For those of you who don't know me, let me introduce myself to you. My name is William Gilday. I'm your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I started trading in the year of 2006 after watching a infomercial at 2 a.m. sitting on the couch because I worked night shift 98% of my life, and as a firefighter paramedic for 27 years. Well, I retired in 2008, and 9 days later, I decided, well, I think I'm going to go to Thailand after a friend of mine convinced me to do that. I was actually in the Dominican Republic where I met this gentleman, and ended up coming to Thailand for a 3-month holiday. Well, traders, I'm in my 9th year living in Asia and absolutely loving it. The people, the food, and I got to tell you, the time zone of trading Forex is awesome. I get up early in the morning, 5:30 in the morning. I'm reading and watching and seeing what happened in the sessions previous. London closed, the whole New York session, as we get ready for a new trading day. So how do I trade? Well, I'm a pullback trader, so I like to see a currency pair make a move, I fib it, get a pullback, and then I make my entry, right? We always want to try to get the best price. And also, I listen to fundamentals. I'm real big with fundamentals now. And it's really funny. If you would have asked me that 4 years ago, I would have laughed at you. Because I was a technical trader, and I still am a technical trader. I love technical trading. I love looking at candlesticks. I love looking at charts, support, resistance, price action, price structure, price failure, right, and price levels. I got one platform where all I have on there is price levels. In other words, these are price levels that prices reacted to in the past from the daily chart, the 4-hour chart, and the 1-hour chart, and the 30-minute chart. I have price levels on these charts, and it's on a different platform, so it's not actually on my trading chart, so it doesn't mess up my trading chart. I really don't like a lot of stuff on my charts, and the charts that you see in this presentation is really what my live charts look like. I only have 3 exponential moving averages, and that's it. I don't have anything else on my charts. So I take my fundamentals, I take my technicals, I put them together, and I do an analysis on both of them, and then I turn around and I make a trade plan. After I make a trade plan, I put that trade plan into action, and I wait for price to come back to me, right? I expect price to do what it's going to do. And we'll talk about that in just a moment, because I wanted to talk about the dollar index. You know, the dollar index is almost at 97, right? And that's why we saw some of the moves that we watched yesterday during London and the Open of New York. And unfortunately, I'm only in New York for about 2.5 hours because I trade options. But that comes up to about 11 o'clock at night for me, and I'm up at 5:30 in the morning to get ready to do this presentation and other things that I need to get done before the London Open. And one is doing my laps in the pool. I don't think it's going to happen today, though. It looks like it's going to be a full, complete raining day. All right, that's enough about me. Let's get over to the legal stuff. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex or any other market that you trade. Traders, remember that this game is all about capital preservation. Live to trade another day. Therefore, please do not trade with money you cannot afford to lose. Traders, Always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get over to news and commentary. Let's look at some numbers. First time we have some red actually in the U.S. markets. They were hoping that they were going to see 1 week of up days for 5 days in a row. And, well, that didn't happen, my friends, because the Dow 30 did close positive 0.14%. The S&P 500 closed negative 0.14%. And the NASDAQ closed negative 0.38%. And the small cap 2000 closed negative 0.50%. Well, that's okay because I think it's probably just a pullback, but it's not good for my trades that I have on at the moment. So let's head over to the Eurozone and let's take a look at that. And it looks like that's also a mixed bunch here. The DAX, it was negative 0.81%. Traders, if you ever get the opportunity to look at the DAX at the open for the first 30 minutes, is it exciting? Yeah, I'm looking at that and I'm thinking about trading the DAX just for the first 30 minutes of the London Open. You can grab 100 points one way and grab 100 points the other way. And basically, traders, if you're not a moderator or you're not, teaching, you can close off your computer and you can say, okay, I'm done for the day. Have a nice week, right? You can get 200 points. It's really amazing. So I'm studying the DAX very hard. The FTSE 100 closed positive 0.03%, as the CAC 40 out of Paris was negative 0.63%, and the Eurostoxx 50 was negative 0.55%. Really not good numbers. The pound had some bad numbers. The ZOO numbers came out of the Euro and Germany yesterday, and they were not good. Now, saying that, they were not good, but the market didn't react to it. The market really did not react to it. The market didn't react until like another 2 hours later, like London lunch, into the New York Open. All of a sudden, the euro dumps like a rock, the pound dumps like a rock, and we'll see that in just a second when we get to the charts. All right, let's take a look at Asia. What's going on in Asia? Some of the Asian companies are open at the moment. Some are closed. They don't open for another 40 minutes. However, the Nikkei 225 is open. It's currently negative 0.80%. The S&P ASX 200 is positive 0.03%. The China A50 is negative 0.68%. And the Hang Seng out of Hong Kong is negative 0.60%. They're not open yet. They have 40 minutes. However, the Kospi out of Seoul is open, and they are currently negative 0.50%. Let's take a look at our economic calendar, and I have to tell you, traders, very slow day in news today. There is nothing in Asia. I mean, nothing. The Aussie had some very light MI leading index data, which was nothing, and didn't do anything. And then we come into the Eurozone, and we have some medium impact. There's some PPI coming out of the Euro. We got, and that's from Germany, but pretty slow into that. I think the big one is going to be average earnings index bonus for the pound. And we also have a climate count change for the pound today in the London session. So pretty dull day today in data-wise. So it's going to be a technical trading day. The only high impact is going to be in the U.S. session. Another one is crude oil inventories, which we get every single Wednesday, unless there's a holiday. And that comes out today, so the oil traders will be watching that. So that's what's going on as far as our calendar goes, and that's what's going on as far as our indices go. So let's talk about some stuff. Being that we're talking about oil inventories, the price of oil went down to $44, I think it was 33 cents yesterday, which was a 4-month low. A 4-month low. Now, I've explained to you about oil, right? And, it's not a supply and demand situation with oil. There's no problem with supply, folks. They don't have enough places to store oil, all these countries, including the U.S. They have barges sitting off in the ocean, just sitting out there filled with oil. So it's not a supply and demand thing. It's a bank issue. The 7 largest banks in the world control the price of oil. They buy and sell and hedge oil, and that's how we stay there. They want oil at $50 a barrel, right? Because the people, and I'm talking about millions and millions of businesses that have big loans out who are in the oil industry, they don't want them to default. That would be a global economic disaster. So they need to keep these people afloat. So yesterday's move down to 44.33 was a stop run. The banks did that on purpose. It was bullish and it came back down. Once it got down below the 50 mark, it was sort of went sideways and it was teasing people. But yesterday, if you look at an oil chart, you could see and that was actually an hour before the U.S. Open, and it just dumped. Oil just dumped. It was unbelievable. The rest of my commentary is watch the dollar index. The dollar index is up at 96.70, 71, and we're heading for 97. So the dollar is very, very strong at the moment. So we're watching the dollar index a lot. And I'm going to tell you, traders, the euro, the pound, and the Aussie are bearish. And I've been saying this for a long time. And yesterday, they all fell off the cliff. And I actually put that on my blog posts. I put it on Twitter. I put it everywhere that, listen, these pairs are going to fall off the cliff as long as this dollar index stays strong. Now, I will tell you that it didn't help the euro that the German zoo and the Euro zoo numbers yesterday came out horrible. So, they've had no good data. And Brexit is showing its beautiful face, and it's hurting their economy. You can say what you want. It's hurting their economy. But we expected that, and I think the UK expected that. So I don't think it's a surprise to them. They're talking about them lowering interest rates. I don't think that's going to happen. Not in the near future. I think they're gonna wait out the storm for a while. I think the key is when are they gonna invoke Section 50, and then they're on a 2-year time clock. And yesterday it was said that that won't be until after the first of the year. So we're looking at 2017 before they invoke Section 50, and then they're on a 2-year time clock to totally exit the EU. All right, enough about that. Wow, we just moving on those minutes. I'm burning them down. Let's hit the euro dollar. Here you can see, look at this stump here. This was, like I said, in the New York session, falling off the cliff. A lot of indicators here that showed you that this was going to happen. We were sideways for 2 days in the euro. Actually, no price action. It was actually horrible, right? We got teased a lot. You can see the 10 exponential moving average going above and below, and then finally went below. And we saw a red candle, a doji, and a second red candle. And that was basically, that second doji was your signal. The next candle was red. That was your entry. And down you came, and it was a beautiful trade. However, today I'm looking for an aggressive pullback because I think what's going to happen today is all the traders are going to take their profits today. And I'd like to see the euro get back up to 1075. I mean, I can't believe that the euro is down at 1.1006, right? That is support, but that is the low from yesterday. So what do we want? We want an aggressive pullback to the R1 pivot, the 200 exponential moving average. We'll get in at 1.1068. We'll get out at 1.1006. So we're looking at a 60 pip trade. It's not going to be easy, but it surely can be done. We saw it yesterday. Let's take a look at the Great British Pound. This was a slow grinding fall yesterday. This was so predictable. It was unbelievable watching this happen yesterday. It started out really slow and it just grinded through the day slowly. Didn't have any big moves. You see maybe one big red candle there. Other than that, this basically rode the 10 all the way down. This really never closed above the 10 EMA, right? Until Asia today. So, this is right. And now we have a doji candle, and this chart was I did probably 15 minutes before I'm recording this. So this is an active chart. This chart is very current. And what do I expect? Well, I want a pullback, right? Let's get to the R1 or the 200 at 1.3227, and we'll sell it at 1.3091. Is it going to happen? I don't know. I really don't. This is a tough call today. They have some data coming out today. It's, nothing. I don't think that's going to jump the markets. But the last thing that the pound needs is bad data. They really don't need more bad numbers coming out. So we'll see. But this thing is really taking a low, and I'm looking for an aggressive pullback. And I see the daily pivot point with that 55 EMA. And if you look left of the chart, there's price action there. It's going to be a hard trade. It's going to be a hard trade. And this can just continue to fall, and that's the way it's going to be. Let's take a look at the Aussie dollar. Aussie dollar, what happened yesterday with the Aussie dollar? Right, we had the release of their meeting minutes yesterday, remember? And they were bad. And since then, this was a slow grind down and never stopped. This gave us some bearish candles and never stopped. You could have taken this trade below that 200 exponential moving average and woke up this morning, and you would have been very happy if you're in Asia. For those of you in the U.S., you're getting ready to go to sleep, and you would be very happy, right? This just was a nice slow grind down to the downside, and I'm looking for the Aussie to give us a pullback to the 200 at 0.7569. We'll get out at 0.7481. Will it work? Not sure. Really, I'm not sure. We'll see how it works. But the Aussie's good about giving pullbacks. I have to give the Aussie credit where credit's due, and they do give you nice pullbacks. So we'll see how that goes. Let's take a look at the Euro Aussie. Really, I told you that this pair is really funky. When it gets in a mode where it wants to go in one direction, it does, right? And it did. And we saw this on Monday where this was in an up move. And what happened, it continued into yesterday. And then in New York yesterday, it decided to make a fall down to the downside and went sideways at the after the New York lunch. And here we are now in Asia at the daily pivot point. Well, my view on the Euro Aussie is bearish. So I want to sell this at 1.4667. We're getting the retest of the daily pivot point right now. Watch, I put a star next to that 200 exponential moving average. Watch that. That's going to be vital. There's a lot of price action left of the chart there. But we want to take this down to the low at 1.4532. Nice bearish sell trade on the Euro Aussie. Let's take a look at the Euro Yen. Euro Yen, I marked with this rectangle box here. I just wanted to talk about, you always hear me talk about Forex junk, right? Well, this is a perfect example of an ugly chart with a lot of Forex junk. And I've got two stars on here. One is a daily pivot point and one is a 200. There's a lot of nasty price action left of this. So how are you going to trade this? Well, one, I probably wouldn't trade the Euro Yen today. This just needs to really clean itself up. Now, I'm bearish in this. My bias is to sell the Euro Yen. So we need an aggressive pullback to this all-one at a minimum, because that's going to turn us into where resistance is. If you take a look left of the chart at 117.61, and we'll take this all the way down to 116.44. But we got to get through all this, what we call Forex junk. There's no wide open space in this chart, my good friends. None at all. All right, let's take a look at the New Zealand dollar. I am way over today. I knew that was going to happen. New Zealand worked nice yesterday. Really nice trade. Look at that big red candle. I was sort of shy whether this was going to happen or not, but I blogged this yesterday, this New Zealand dollar pair, and I blogged the Euro Yen, and they both ended up working out, but surprisingly. And this is. We can do analysis and trade plans all day long. Doesn't mean the market's going to listen to us, right? The market is always right. We have to adjust to the market. The market's not going to adjust to us. So we're looking for an aggressive pullback to the 38.2 Fibonacci level at 0.7075. We'll get out at 0.7015. You can also see I have a rectangle box there at the 50% fib, just showing you, because you don't see the whole chart, right? Because this is just a slide, and you can see where there's price action there. We might get a bounce there. So we got to be careful. Now, the bounce can be to our advantage, where it can be a bearish bounce. We can sell it from there. So just keep alert to that. Traders, I am very late today, 4.5 minutes over my time, but I want to thank you for being with me. On behalf of myself, William Gilday, and our great fans at FXCL Excellence in Trading, hey, it's July 20th, 2016. Traders, please come visit our website at fxclearing.com, and we'll talk to you in about 24 hours, and we'll see how the day works out. Traders, always remember to trade smart and not hard. Take care, traders. Bye-bye.